Alrighty, welcome everybody. Welcome to Income Navigator and Active Trader members both. Some of you are all the same. Some are in both different services, but want to do a session today on just technical analysis and just sharing some of my basic technical analysis. I don't want you to get too carried away with this. We're just going to spend a little bit of time talking about it and maybe how to identify some different trading opportunities when it comes to it. So we're going to look at, for me, just a couple simple pieces of technical analysis that I will use to identify potential trades, either whether it's futures, whether it's stocks, doesn't really matter. And then we're going to look at two really different, distinct type of ways to use that. Number one, we're going to look at the Income Navigator trading methodology, where we're going to look to identify really what's a 1-1-2 opportunity, what's a strangle opportunity, and what might be a ratio spread or naked puts or spreads or something like that. And then from the active trader standpoint, what we're going to look at as well is taking a look at, on the stock side, a little bit different. Primarily for me, it would be spread trades, credit spread trades. I'm making some notes here to make sure I cover everything. So mostly credit spread trades or potentially butterfly trades. Those will be the two primary vehicles for me on the stock or other side. So let's take a look into here, but I'm going to keep it really, really simple. And I really look for only, I'm going to say 3 patterns overall. So I'm going to take a look at 3 patterns, and I'm going to blast through something here. If you guys want this, I was putting something together, and I'm going to spend maybe the first, I'm going to try to time it to 10 minutes talking about candlesticks a bit here, and then we'll get into patterns. Then we'll get into trade opportunities and see what we can find out there and see how these work for everybody. All right, so let's jump into it. And just a quick piece, and let me get my face off of here. You don't need to see me the whole time that we're here, but just a little quick, I'm going to shorten this up. Maybe it's a little easier for you to see. Just talking about technical analysis. And for me, I use a lot of candlestick charting. So I find candlestick charting the most useful, and a lot of times you'll see that I'll post things about news, or the fact that I kind of ignore news and ignore things that are going on out there. And the reason I talk about that is because it helps me stay more disciplined. Okay, you can get caught up in getting carried away with all kinds of news and other things that are going on, but really all that matters to you is the price action. So I want you to really focus on price action and what you're seeing versus what news. To me, this is just my opinion, but news always comes with someone's opinion a little bit, which is why I just said the word opinion. Okay. Most people will not just report news, but they typically will tell you what it's going to do and why. And most folks here in the Discord will post news and then tell you that's why something's happening. And it very well may be that's the case. But as soon as you tell me how I should interpret the news, you're now giving me opinions, as opposed to me just watching the price action. So I'm going to trust the chart to tell me what's going on in the price. And obviously any news out there would be reflected typically in the price. No one that's a retail trader is going to get the inside scoop of news before institutional investors. Okay, it's not hitting CNBC and then someone at Goldman Sachs is learning about it 2 hours later. So you're typically not scooping Goldman Sachs or JP Morgan or anybody else, any trading houses. You're not getting the jump on them. So why should I bother watching news and trying to pay attention to the news? I get it. You want to get a sense of the macro and all that. It's all good. Okay. I'm just telling you, when it comes to actually making your trades, you don't want to let it bias you. What you want to let it do is you want to really look at the price, because the price is going to include most of the news that you see. So talking about candlesticks, maybe this is rudimentary for everybody here, but candlestick charts, typically what most of us will use here. And in fact, we can actually make this probably even a little bigger here. But candlesticks are made up of the body, which is the thick piece, the thick part of the candlestick. It's either green or red. If the close is above the open, so you can see the open down here. If it closes above the open, typically it's going to be green, or it might be clear. Or if it opens here and then closes down here in the body, it closes lower, then that candle will be red. It's telling you what's going on in that particular chart. Is it a bullish day, okay, or a bullish time frame that you're looking at? Since you're either opening down here and closing up, or you're opening here and closing down. You can also see the wick that sticks up, or either above or below. Sometimes it doesn't do one or the other, or both. But the wick could be who was moving that stock either further, lower. Okay, so maybe there was lower prices during the day, and then there was some higher prices during the day, and then we finished off the highs. That will help you determine a bit of what happened during the day. So I don't even have to watch the 15-minute or the 1 hour, depending on what type of trading you're doing. We're going to talk about two different types of trading. We're going to talk about what we do in Income Navigator, which to me is a longer term. So for Income Navigator, we're talking typically now, we're talking 60, 90, 120 day. We might even be talking leaps out a year or so. Those are, to me, longer term time frames. There's rare occasions where I'm going to be under 60 days in something, unless I'm trading maybe a credit spread. That might be 30 days. In the active trader service, it's more of a swing trading type of service. Now, Gabe's in there, and he's actively trading futures, scalping up and down. So he might be intraday. He might be using, hourly, 5-minute, 10-minute, whatever candles you may be doing. For most of the other people in active trader, you're probably using daily candles, which means you're probably trading something in the neighborhood of 7 to 30 DTE most of the time. Okay, so that's really the difference between the two services, just so you guys get a sense. Income Navigator, we're looking at income generation, primarily selling premium to generate income for growth. Okay. In the active trader service, it's more of a swing trading, active trading service where you could be buying, you could be selling, but you're trading strictly for an income-based trade, not necessarily a growth-based trade. These are income-based trades that are short-term in length for the most part. We even do, you might even do some 0 DTE, or like I said, intraday scalping or something like that. Now, I find that again, typically is a little bit more, requires a lot more investment of your time and your effort and your education to really be able to do that. And I just don't like the investment in my time. I don't really want to watch something all day long. Okay. I will do some 0 DTE trading in both services, only when I have time. I didn't do it today. Today was a perfect day to do it, and I didn't do it. Why? I got busy. I have some other things to do. I wanted to put some of this together for you. So it really all depends on your particular goals and what you want to do. All right, so candlesticks, pretty easy. Get a body, you have wicks up and down. How do you use those properly? Okay, and I'm really looking at either a bullish pattern, a bearish pattern, or a neutral pattern. And I'm just going to give you a couple quick things here. I'll share this later. You can have it. But I'm going to look at some bullish reversal patterns. I like reversals. Okay, so you have really two different types of trading. You have reversal trading, and then you have breakouts. Okay, two different styles of trades. I like them both. I'm much better at reversals than I am at breakouts, typically. Gabe is more of a breakout trader. He's looking at different levels. He loves to see when a certain level gets broken or provides support and something bounce off of that. But he's looking at more probably breakouts. I look at more reversals. Right? And for me, because I'm more of a premium seller and I'm not a buyer of either options or the futures, because I'm a seller, I can be slightly wrong. So I like the reversal because I can get underneath the reversal pattern itself. And we'll talk about a little bit about that. So I just want to give you just some sense here. So you have the bullish hammer, which typically is found at the bottom of a downtrend. So if you're trending down, 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 the hammer here will occur. And again, this is where you have a small upper body here, which means sellers tried to take it down, buyers pushed it up, okay, and buyers won the day. We closed above the open typically, and we closed near the highs of the day. Okay, so buyers tried to take us down. Sellers tried to take us down, and then the bulls rallied us up, and we closed higher. If this happens at the bottom of a chart move, this hammer is a pretty good indicator that maybe a reversal could be in the works. Now, this could be a daily, could be a 13-minute or 15-minute, 3-minute, whatever you might wish to do. Okay, inverted hammer, similar to a hammer, except it's flipped upside down. Same type of thing. This also, if it occurs at the bottom of a downtrend, this could also potentially indicate a reversal that's showing that, hey, buyers are really trying to push this thing up. They couldn't really get it done. Okay, but I put here a green inverted hammer is stronger than a red one. What would a green one mean? A green one would mean we opened down here at the bottom. Buyers pushed it up. They couldn't win the whole day, but it still closed above the open. So a green inverted hammer is also a pretty good reversal, potential reversal signal. Okay. And then you also have a bullish engulfing pattern. Essentially what this would be is if you have these bearish or small bearish red candle here, and the next candle is a bullish green candle where we opened a bit lower. Okay, so we opened lower than the previous day's close. Okay, and then we blasted above the previous day's high as well, or the previous day's open, and finished up here. Okay, this shows that the buyers completely won the day, pushed it up. This engulfing candle typically can indicate a decent bullish reversal. So it indicates a really strong shift from this selling pressure to potentially buying pressure. All right, it's pretty simple. I'm not going to go through a whole lot here with you. Then for the bearish reversals, the shooting star is pretty much the opposite of the hammer. Okay, it happens at the top of a trend. Okay, which means we opened, the bulls pushed us higher, but the bears brought us back down. Now, we may have either finished higher or lower on the day, depending on whether it's red or green. Okay, but you've got this long upper wick above it. So when this happens at the top of an uptrend, okay, you typically could see a reversal coming. That means bulls could not keep it going. Bears won the day. And then the next candle is what we have to watch. Okay. All right. And then on the hanging man here, it's pretty much the same thing as the hammer, but it could happen at the bottom. So just like the inverted hammer here, okay, the hanging man, okay, could appear at the top here, and essentially this would mean a bearish reversal as well. Bears tried to win. They didn't quite get the job done, but it shows a big change in sentiment, bullish, 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 bullish. Okay, and now bears really tried to make a run. They didn't do a great job, but they still did enough to put you into a reversal potentially. So it just shows that sellers now are really stepping up and they could outweigh the buying pressure. Okay, real simple. And then you have the bearish engulfing, same type of thing where you open above the previous day's bullish high, okay, but you close well below the previous day's open. So the bearish candle here, larger and stronger, shows a strong shift in momentum potentially, and now you can start to get a reversal to the bottom here. All right. And then you have just a couple neutral candlesticks. I don't expect anyone to remember all of these, but typically a doji is when the open and close are almost at the exact same price. And it's anywhere in the candle wick that it happens. Could happen at the lower part, which would be a gravestone doji. Could happen at the higher part, which could be a dragonfly doji. Okay. Or it could happen in the middle, which is your typical just standard doji, long-legged here, but really your standard doji. So it depends on where these appear in the, yeah, I'll make this document available to everybody here, right? So the doji, it's signaling a potential reversal, but really it's signaling indecision, okay? There's no winners, there's no winners. The bears and bulls closed the day at the same price we opened. We may have had a run up. Now, if the gravestone happens at the top of a bullish trend, this could indicate, okay, the bulls couldn't keep it running and we ended up where we started. Okay, it's really the next candle is going to be key. This also, any of these at the top or a low of a move could signal potential indecision and maybe a reversal. All right. Some real keys here is always wait for the confirmation before you make a trade. And I do this not only with candlestick patterns, but I'm also looking at these from when I look at like the MACD or the Squeeze Pro. One bar doesn't do it for me. I need to see confirmation of a second bar typically to see if this is going to be helpful. All right, so I want to see confirmation. I want to see a subsequent candle closing in the direction of the reversal. I'd also like to see volume, high trading volume on that reversal pattern as well, and then high trading volume potentially on the confirmation bar as well. So that would be helpful here, but I'm looking for confirmation and I'm looking for volume to be pretty strong on these candles. All right, and from a quick risk management standpoint, just implement good risk management rules. We'll talk about setting stops here in just a moment. If we're trading, and again, we're not trying to turn you guys all into a bunch of active traders. That's not the goal here. You can do these on any time frame. I like these on the weekly when I'm trading in the Income Navigator service because I'm looking at 60, 90, 120-day trades, leaps potentially. So a daily chart doesn't do me any good. Candlesticks on a daily chart doesn't mean anything to me when I'm dealing with something that's out there for 3 or 4 or 6 to 12 months. All right. So let's look at a couple quick chart patterns. Now, I'm going to talk about really 2 patterns more than anything. These are my favorites. I'm just sharing. There's a million chart patterns out there. We can spend days and days and days on this. What I want you to do is just keep this stuff simple. Okay. So we're going to look at ascending and descending triangles, probably my favorite pattern. And right now you can find them just about everywhere. So an ascending triangle here is a bullish formation. Okay. Usually it forms during an uptrend. Okay, so there's been an uptrend. And you've got an upper resistance level here, this flat resistance that you see. Shrink this, maybe it looks better for you. You can see there's flat resistance that we're seeing here. And every time we come down and have a pullback, it's less each time, which means sellers aren't stronger than the bulls. The bulls keep rallying back up, but we haven't been able to break the resistance yet. Okay, but you're starting to squeeze tighter and build up like a coiled spring here that as soon as if we do pop this resistance, that could lead to a pretty nice breakout. Okay, and then if you were setting a stop loss here, if you were actively trading it or doing credit spreads or something, I typically look at this most recent swing low before the breakout, and that's where I might put a stop loss. Okay, so it gives you a sense. Also, this resistance will typically, in many cases, flip to support. So you got a support resistance flip, and that's when you get this former flat resistance, it may come down, bounce right off of that, and then continue to go higher. If it breaks it, I'll look for that swing low that's in here. Anyway, just giving you some sense of how I trade. And I love the ascending triangles, really good bullish pattern. Descending triangle is exactly the same thing, only in the other direction. Okay, it's just the bearish counterpart to it. Okay, it happens typically in a downtrend overall. Okay, you're going to see that you've got a flat lower resistance or support here. So you've got this flat support. And then every time the bulls try to rally, they have a little bit less momentum each time. And the bulls can't get the rally to move, and the bears keep bringing it down to this. Okay, so sellers are definitely more aggressive. They're not letting the bulls move it higher. And then eventually, if we break this trend line, okay, now the trend can continue or the breakout happens to the downside. So ascending triangle, descending triangle, we're going to find a bunch of those today. The last one here on these would be a symmetrical triangle. So this one is really more of a neutral pattern. Okay, you've got lower ascending support. So you've got a trend line, a rising trend line, as well as a falling upper trend line. Okay, so really supply and demand, buyers and sellers are equal, and it's just coiling like a spring, tighter and tighter and tighter until it pops one direction or another. Okay? So we're looking to see if we break out of this pattern. Typically, then we'll continue that direction for a while. And if you wanted to stop out, okay, you could just put your stop below the previous stop or the previous swing part here, or just below the apex of it. So that's typically what we'll do. So we'll be looking for triangles everywhere. And then my last thing here, which is another favorite. So you've got triangle patterns, okay? Ascending triangle, descending, and symmetrical triangle. And then you also have rising and falling wedges. Similar style, except these, typically the breakout's going in the opposite direction of the actual move. So here you can see that, bulls are pushing it up, shallower pullback, pushing it up, shallower pullback. So this is a series of higher highs, higher lows, higher highs, higher lows. But each time the higher highs, aren't dramatically higher, and the lows are definitely rising. And you're getting tighter and tighter and tighter in here. Typically, if this is happening in an uptrend like this, a break of the support line or the uptrend line at the bottom here, a break to the downside is a pretty good signal for a bearish move. Okay, so a rising wedge, we break below it, that's typically a good bearish move, and then you can put a stop loss above the most recent swing highs before that break happened. The falling wedge is exactly the same type of a thing. Okay, and you see me draw these a lot, either the triangles or the wedges. Either way, this is typically what I'm looking for. But again, you've got the downtrend is losing momentum, okay, and it's getting tighter and tighter and tighter, and then eventually you break higher out of it. Okay, so that gives you a good sense. There's more patterns you can go all day long, but that's the typical direction that you're heading in. All right, just to give you some sense. Okay, but the most important thing is to make sure that you are keeping an eye out for confirmation. All right, so let's take a look and see kind of what patterns are out there, what could be happening to give you some sense of what the move is. And if we're looking at ES here, the one thing, is this, okay, if we started to draw some lines, and I like to connect at least 3 or more. So this is the weekly. Let's connect the weekly. And I'm also going to look at something along this line. Okay, this is the weekly chart. Okay, we've been definitely rising up, but this is in reality, this is a rising wedge pattern. Okay, now we could continue to move to the upside, and we'll just keep this pattern moving as we go. But if we're looking over here at the daily, you can see how it's handling inside of this range, right? And then what happened today? Okay, you got the little white dot here is a PSAR reversal, say PSAR. So it's letting me know that you have a bullish, or I'm sorry, a bearish reversal pattern potentially happening. The white dot is now above it. So there's a bearish reversal, and you broke the trend line on ES. I'm not saying the market's crashing and we're going to zero and all of that stuff, but I think you have to pay some attention in here to what's going on, because we want to see what the continuation pattern will be tomorrow on this particular one. Okay, one day doesn't make a trend. I'm not too worried about it. Okay, one candle, one bar. You can see here squeeze. The bars are reducing. So as we were moving up on the weekly, MACD was falling. Okay, and we had 3 consecutive down bars until the last week. Then we tipped over, or 2 weeks ago, and then we tipped over last week and this week. So MACD heading lower. We're running out of momentum. Squeeze has been heading lower for 4 weeks. We're running out of momentum. RSI is still overbought. Now it's starting to flip over. Okay. So right now, it's a pretty good downtrending channel, or downtrend here, potentially starting, but who knows? Until we get confirmation of today's bar here, I'm not going to do a whole lot of anything. Doesn't mean the world's crashing. Okay, we've got plenty of support levels here. Every one of these pivot points is support. Okay, you've got the 21 EMA as support. You had this uptrend line, which was support. You got the 50 and fuchsia or whatever color here. So we have plenty of support levels all over the place on ES. So we'll see what happens on this particular one. Let's take a look over at oil and take a look at oil. And I like trading looking at 2 different time frames. Okay, one thing, let me take this off the screen so it's a little easier to see. You've got a major downtrend in here, but essentially what you've got going on the weekly here and even on the daily is this is a rising wedge pattern. Okay, had we broken out to the downside, would be something to potentially watch, because again, if you break to the downside, bullish. We broke to the upside here, so we're just continuing our move higher. And if I'm looking at this overall downside trend, we've been just really in this channel moving. I know there's a lot of things drawn on here, so I'm going to remove this off now. But it was starting to set up as a rising wedge. I would start to worry if we broke below it. But right now, things look pretty good overall. All right, so there we go. Taking a look at that and seeing where oil is. This is breaking out to the upside. You're not in any one of these key patterns. What you could also be watching for is there anything that's topping here? This is not really, it's still a bit of a candlestick pattern here today, where you've got the longer wick. The body's still pretty good size on oil, okay, but you don't have the longer wick to the upside, but could be a little bit bearish, of a move. We'll see what happens tomorrow. Do we reverse? Okay. Sometimes you can pick it out. Here's a doji back in here, seeing a pretty good reversal signal here. Bears pushed it down. Bulls tried to move it up. Indecision day. Next day, we had to move up to the upside. Okay. Good reversal pattern here. This was a perfect spot. Okay. Right in here. Okay. This was a great spot to get long oil. You were bouncing right off of this uptrend that had been touched 1, 2, 3 times, okay, multiple times on this uptrend line, with a nice doji pattern right in here, right at the trend line, and then a reversal higher the next day. So this next day, good continuation pattern to the upside, and then you had a pretty nice move. Oil went from 73 all the way up to about 77. So that would have been a good swing trade right there. Gives you some sense. You can find these all over the place in here. You can see them in other places. Okay, you can see another one right in here. You can see this particular pattern that we've got in here where bears tried to push it down. Bulls won the day. The next day, a doji next to it. So we really had a reversal pattern here, okay, that happened right here. The next day, a little bit of indecision. There was really no move. The next day was the confirmation to the upside dough, and boom, we ran again. Okay, so and on this particular one, you're at the 21 EMA, which is the green line. So you came down to the 21, had a nice reversal candle right here on the 21. Well, that gives me really, looking at that particular reversal right on the 21, I think that sets up pretty well for a nice trade. So at the bottom, you get this bullish hammer right here, and then we reversed higher right at the 21. So whether you're at a trend line or the 21 or the 50, any of those worked. You can even see that the bottom of this hammer came down, hit the 50, and then we closed above the 21. So nice opportunities in here to play some swing trades up or down. Again, we're not swing trading here in Income Navigator. I'm just giving you some ideas on what to look for. On the weekly, though, what are we looking at right here? You're looking at a really nice back here on December 11th this week. Okay, this was really a pretty nice hammer. Okay, right at the 200-day moving average. Bulls or bears pulled it down. Bulls pushed it up. Had been in a nice downtrend for several months. Hammer candle here. A little bit of a continuation the next day to the upside. Okay, then we kind of meandered around a bit, but that's really where this entire uptrend started, right off of this candle. Okay, right back here, you can see it had a nice uptrend, and then you've got pretty much a doji candle right here, the long wick to the upside. Okay, the bulls could not push it up anymore. Okay, indecision day, next day, big candle down here, and then that was the start. So this was the start of the downtrend. It gives me a sense of, as I'm looking at the patterns and I look at the trends, where are we setting up? Okay, so right now I care more about the weekly trend to trade oil. So right now you're in a bullish trend. You got MACD rising, RSI rising, squeeze you're in a squeeze with the momentum rising. Right now, this is, oil is bullish, and this is not looking like it's slowing down at all. It actually broke through the top of the channel. Is it a blow off top? We'll see. They'll look above and maybe fail or something. We'll see. But either way, this thing looks pretty solid to the upside. So we've been playing, probably best to draw it up. We have been playing this thing bullish for quite some time. So what am I sitting on in the trading account? Well, I've got 112 trades that I've had on. I had 2 of those that expire in April. I've got 112 trade for May, a 111 trade for May, another 112 trade for May. I've got a strangle trade on in oil. So Tom, why are you doing a strangle in an uptrend? Okay. This strangle was put on 11 days ago. And so if we go back 11 days, we're somewhere in this neighborhood here on a little bit of a pullback on the 21st. Okay, this nice pullback, I think, gave us a good opportunity. Got close to the 21 EMA. We were right in between the 3 ATR bands. We're still sitting nicely in between those here as well. So I thought a strangle would be a good opportunity. And we were really in the middle of these bands, and it's okay because it's a probability trade. No matter what the chart is saying, strangles are still going to give me a 90% probability of being successful. So I'm okay with that. And then we also have a 120-day naked put on oil, and that thing's up 6% since yesterday. Okay, so another nice move today. and we've got a 120-day trade, and we just put it on yesterday. And why did we put it on yesterday? Because we took one off yesterday. So we already had one hit, a 40% winner, took it off, and now we've got another one on. I don't necessarily love long trades in commodities like this. 120 days is kind of my maximum. I'm not going to trade leaps on this thing. But why commodities are different, and Captain Jones and I have been good friends for a long time, and Dennis and I had a good conversation. But when you are trading a commodity, you're typically in a range. So here's a monthly range. Okay. Look at, you can see this thing goes all the way up to 130, comes all the way back down here to mid to 30s. Then all the way back up here. It's about 114, comes down, stays in a range, comes back down to the 30 range, moves around, comes back down into the 20s this time, all the way back up to the 130, and now back in the middle. Okay. Oil is not the same as ES, okay, which is why trading naked calls for me is not a fantastic thing to do. When you're looking at something like ES, okay, stocks go up over time. This is the stock market since 2005 on a monthly basis. Okay. I don't want to keep playing the upside on this thing unless I really have good, clear indications of something rolling over. I don't like selling calls. Okay. Why? Because markets go up. Commodities don't. Commodities, outside of kind of gold for the most part, commodities just oscillate in a price range. Okay. And oil, somewhere between 110, okay, and somewhere down here around 30. So between 110 and 30, oil stays in that range. Okay, that pretty much gives you what you're looking at. Okay, this thing just oscillates. We are at the same price that we were all the way back in November of 2007. Okay, it just bounces up and down, which is why strangles on commodities can work decently, because they trade in a range, or selling calls at a high level can knock things down a bit as well, right? But otherwise, this thing's just in an uptrend channel, and you just let it rock and roll on it. Gold. What do we see on gold if we jump in here? Can you identify points where the market was switching? So yeah, I think it's a good campaign trade, Craig, on oil. And yeah, Kevin, Head and Shoulders, I'd have to go back and take a look on. I have another Head and Shoulders pattern coming up. But what do you see down here? I mean, campaign trades are great when you know that something's going to stay in a range or trade in a certain direction for a length of time. 1-1-2 trades are perfect campaigns for ES because ES just goes up over time. Okay. So having a campaign trade in 1-1-2s in ES makes sense. Having a campaign trade in oil is not, because oil can go up, it can go down. You just have to really play the direction of the market. When it's going up, I'm using 1-1-2s. When it's going down, I might be playing more strangles in oil. Or if it's going up, I might be doing ratio spreads or naked puts or something like that. All right, but it works until it doesn't. You just have to be careful on oil, because oil will eventually reverse and go down, and then we'll maybe head back to the 30-40 range. You never know on oil, being it's a single commodity, not a basket of 500 stocks. Okay, gold, same thing, single commodity. Take a look at gold over the longer term here. Okay, and you can see gold does trend up over time. Okay, gold does increase value over time. However, there was a period here from 2011 all the way to 2019, 8 years where gold only went down. Okay, now you've been in a trend where gold has only been going up since 2019. Okay. Why strangles when trending down? Typically because I'm getting more premium and I can get wider when things are going down in it. And I still don't, if I can identify the middle of a range, Dan, I'm going to play something more in the middle of a range. I don't mind strangles up or down unless something is ferociously up. I like strangles anywhere. However, when something is popping like gold is here above the 3 ATR level, and the 3 ATR, this white line, is at a 45-degree angle or more, I don't trade strangles. Okay, if something is inside these bands, doesn't mean it can't pop and oh, we got stopped out. Oh well. Okay, things happen, but for the most part, it stays inside these bands, and we revert to the mean of the 21 EMA, and we're at that 21. I like to be putting on strangles there. Even in oil, in a downtrend, okay, you can find that you're going to stick around the 21 EMA, okay, for the most part. Okay. Oil still, even in oil's downtrend here, okay, it really wasn't moving more than 5 points a week, maybe 10 points a week. My strangles are much wider than that. And I didn't mind when it's in here. When something gets outside of this white 3 ADR band, that's when I typically will stay away from doing anything on the strangle side. Okay, but I do like strangles on things that are going down because I get more premium. I can get farther away. And then and typically IV is rising. So you get a little bit of vol crush too, which helps you speed up the time. All right, on gold, look, you can see, at the bottom here in gold, right, there's a nice little doji candle at the bottom here. Not really a great hammer, but right at the bottom of this thing, boom, 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 boom. At the bottom, hammer, follow through the next day, and then gold was off to the races. And if you just stayed in gold, okay, it's showing you no signs of relenting. Now here, potentially, now you got a little bit of a shooting star type of a candle here. Not perfect, shooting star. The body's a little too big. A little doji indecision here, though, probably a little bit better. Indecisive candle, down the next day. Okay, then potentially, and considering we were overbought, this was a perfect trade to maybe get short gold for a while until you, bam, got the hammer candles again. Okay, and then off to the races you were once again. Okay, so again, active trading, is more where I'm taking a look at some of these things. You could see it right here. This is a perfect example of downtrend. Okay, pretty big downtrend, and boom, a reversal candle here. Okay, you got a hammer. Okay, right at the uptrend line, right at the 3 ATR, right at the 200-day moving average on gold. This was when you got long gold. Okay, this is when we start trading either 112s or we're going to stay in ratio spreads or something like that. If gold would set up for better 112s, I'd still be in more of those. I tried to get in a bit. It just doesn't set itself up right. But I think for gold, we continue to just do maybe some ratio spreads, things like that. Gold just doesn't give you quite as good a leverage as other things. But I'm looking at the weekly, and the weekly makes the most sense to me. Gold is rocking, but now you're at the 3 ATR. Okay. And now you're starting to get some pretty long wicks to the upside. If we get another day or so, if we get a day reversal, can we come down back to the 21? Maybe. Has gold already, shot itself up? Maybe. So we'll move our highs. So today, another new all-time high in gold. Just keeps getting new all-time highs. You're riding the 3 ATR. I'm not going to do anything here in gold. Okay. In fact, I don't even want to put anything long on when we are overbought. Look how overbought on the RSI you are. Okay, we are way up in the overbought territory at 81. We're hardly ever that high. We're way up into overbought territory here on the weekly. So weekly, daily, above the 3 ATR. RSI is overbought. Even though the momentum is there, can continue to go, I don't want to start putting on a bunch of long trades on something that's overbought, right? So we'll wait on gold till maybe we come back down closer to the 21, and maybe we can start to strangle it again. So gold, average true range, Dan, 3 average true range. This is a 3 multiplier on the Keltner channel. So it's 3 standard deviations on this Keltner channel off of the 21 EMA. So it's 3 times the 21 in either direction for these white lines. Okay. So rising, I do have them set up in TradingView as well. So maybe we'll take a quick look at that if you guys want to at some point. But all right, so this gives you a sense. So when I'm looking at these, what I'm trying to do is figure out where do I want to go with a trade on gold? Is there a trade on gold right now? No, I don't think there is. Okay, so I'm out of gold. I'm not in anything. Okay, maybe I would consider, I don't want to get in the way of this runaway freight train, but at some point, maybe you pop a credit spread up here, but I'm not going to do anything, or a call credit spread up here above this 3 ATR, this is as far above the 3 ATR lines we've been, but it's rising. I got to wait to see if this candle turns into a reversal. Okay, so we're just sitting there hanging out, nothing to do. Bonds. Okay. All right, here's a perfect shooting star right here on bonds. Run, shooting star. Next candle was down, off to the races to the downside. Okay. All right, so you can see that might have been a good time to start getting a bit short on bonds as you watch things start to head lower. Oh, how I lost all my pieces here. So anyway, let's take a quick look. All right. You gotta love toss. All right. So anyway, let's get back to bonds. And what do we see? What do we want to trade in bonds? Okay. Right now we're in a downtrend. You've got the bearish PSAR, the white dots heading lower. So you're in a bearish PSAR until you touch a dot, it will flip. So as soon as you come down, okay, here, as soon as you touch a dot, it flips to the bottom. Okay, and then you're in a bullish trend. Right, but you're in a bearish trend. You get the 200 moving down. You have the 50-day moving average in fuchsia here, or whatever color you want to call that, purple, I don't know. But look how flat the 21 EMA is. This is just perfect for strangles. Perfect for strangles. Okay. And what trades do we have on in bonds right now? Well, I have a 112 trade on, okay, which is up 20% here. And we are close to potentially even entering the trap on this move. And I also have a strangle on, which is up 10% in 19 days in bonds. All right. Why? Why would you're in a downtrend. Yeah, I'm dead center of the downtrend, sitting right at the 21 EMA on the weekly. I don't even want to look at the daily because I'm trading a 90 DTE strangle. I'm dead center of the ATR bands. I'm at the 21. I like it. Okay. So I like where we are. Okay. Yeah, you're selling off on the daily here. Okay. Going off on the daily. I'm not too worried about it because I don't have anything that relies on the daily here. So I really don't care a whole lot of what's happening on the daily. Okay. I like to have my 50 line in here. They all got deleted by toss. So I got to thank them for that. But momentum is still to the downside. MACD is falling. Okay. So when I give you guys charts, typically I give you a weekly, okay, downtrend, falling MACD, falling RSI, squeeze momentum's falling. So that's bearish. Okay. And then here we're bearish on the daily as well, falling below the 21. MACD is falling, RSI is falling, squeeze is falling. You're in a really tight squeeze, which is the white dots versus the red dots. Some that use Squeeze Pro have the black dots. I just can't read black on black very easily, so I use the white dots. Okay, tight squeeze, could go any direction. Who knows? All right, so I like where we are on bonds. This is setting up. So if you had to pick something to trade on bonds right now, for me, it's strangles. Okay, it also could be a 112 trade here because I wouldn't mind capturing. I've got this downtrending channel that we've stayed in. I do believe bonds aren't going to zero anytime soon. You can see too that we're well off our lows of the day. This could be a potential reversal candle. My chart setups are in Discord. So if you go in Discord and you go to Tom's resources, then you can go to, I think it's in Facts or somewhere else. It might be an FAQ. Yeah, FAQ has all my chart settings. Okay, so in the FAQ section, you can find all my chart settings. They're all there. All right. So anyway, this is where we are on bonds. All right, let's keep going. I want to pick it up the pace here. All right, so we're in copper right now. Taking a look at copper, okay, you've got an uptrend going. Is it starting to shrink a bit? So if I take the more recent high, okay, from this previous high on here, overall on the weekly, we broke out of this range. Just simple. This is simple stuff. I'm not doing anything crazy here. And this is a nice reversal candle here. So we talked about the reversals at the top, but you also get at the bottom, this is an inverted hammer right here. Perfect inverted hammer, beautiful right here. Follow through the next week up, and you were off to the races. Back up, then you got a shooting star right here, and we came to the downside. They don't work every single time. I'm just using that, but you got a perfect one here. You got another perfect one here. You got a doji for the most part here of indecision. The next candle didn't give you any direction, but then you got a candle, and for 2 weeks you went down. Right? And you can see that candle right in here is a pretty good opportunity here on a bit of a shooting star right here. Next day was down, confirmation, and boom, 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 boom. Then you got the hammer, confirmation, and boom, 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 boom. It's not rocket science. You win some, you lose some. It's just a matter of figuring out what type of a trader do I want to be. And I really don't want to be an active trader trading stocks. I think I can do pretty well at it, but I hate the fact that some yo-yo comes out and says something and my stock tanks the next day. Okay. So fundamentals don't mean diddly to me because the price action figures that all in. Okay. Oh, they missed earnings. Okay. Well, don't trade around earnings, okay? Because someone's going to come out and say something. How many times are earnings bad, but they say something good in the meeting and the stock goes up? How many times are the earnings good, but they say something in the meeting and the stock goes down? Just stay away from that stuff, and your life will be a whole lot easier. You could actually probably draw this thing here a bit as well. So just giving yourself all kinds of different options to draw it out. The longer the time frame, the better. This is pinching in a bit. This is a bit of a rising wedge. If we break to the downside, that'd be a bit bearish for us. But right now, you're just bouncing off of this 21. Here's a perfect hammer right here. So great, a bit of a doji, hammer, doji, so indecision, and then boom, it's off to the races. We could be off to the races now on copper to the upside. I'm watching MACD rising. I'm watching RSI rising. I'm watching them both rise on the weekly chart here. Okay. Well, I'm so mad. I lost my 50 lines. I know I could code those in, but anyway, look at the weekly pattern here. Nicely bullish, heading to the upside. All of your indicators are bullish PSAR, okay? And I'm well above my 21, so I can't strangle copper. Okay, what would you do in copper? Okay, well, a 112 trade would be good, which is what we have in copper, which is up 87% in 36 days. And then what did we do yesterday in copper? Okay, we actually did a put credit spread in copper yesterday. We went out 85 days. Why? It's bullish, okay, in this pattern, moving to the upside. So we have a nice upside move. and my credit spread is at 3.6, which is right here below this previous swing low or pivot level low here. Okay, so on the weekly, I didn't look at the dailies. I don't care about the daily. On the weekly chart, uptrend. Okay, breaking out a bit of a rising wedge, but you're breaking out. This was also right in here. You could see. Let's take this line off. Okay, what do you have right in here? You have an ascending wedge pattern, right? So you have flat resistance that dates back all the way to last year in May. Resistance with a rising trend line. This was a perfect ascending triangle. You could feel it coming, and boom, that was the day that it cranked out. Okay, we have a 1-1-2 trade on now. This could also then flip to resistance. Okay, so we didn't come down and touch it, but we did come down and touched on the 21 and reversed higher. On this reversal, we're moving up. So yesterday I put a put credit spread, and it is below this swing low. Okay, is this helpful to you guys? I mean, I hope this makes a little bit of sense. So it's just a little bit of technical analysis. I'm only looking at like 3 chart patterns, triangle or 2 triangles and wedges, triangles and wedges, triangles and wedges, triangles and wedges. Okay, and then I'm looking to see, do I get a reversal candle? Okay, which gives me a little, and then a confirmation the next day. What I don't have on here is volume, which would be helpful a bit, but all I'm doing is giving myself, and Kevin popped it in here. Yeah, I'm just giving myself the tools to put the odds a little bit more in my favor. I'm still trading a probability of a 15 to 20 delta on a credit spread. Okay. But I think I put the odds in my favor on an uptrend that came back, bounced off the 21 with a nice daily thing, even though I'm going to ignore the daily and go to the weekly. Okay, I'm down below here. If it gets down here, then I lose. Okay, right now, okay, you've got the 21 moving higher, about to break the 200. Okay, I haven't even touched base on a whole lot of moving averages in here, just patterns and candlesticks, patterns and candlesticks. You can probably remove most of the moving averages as well. I just find them helpful that we're either going to bounce off the 21 or we're going to bounce off the 50. Okay, the 200 is kind of useless, but it gives us an overall sense of trend. Okay, the trend is up, the 200's up, we're moving up. It looks nice. Okay, we'll make the trade. All right, let me jump into a few more things here. I know we're at the top of the hour, but I can go for a little bit longer if you guys are good with it. If not, it'll be recorded. All right. Hat Dan says, is it naive to just trade based on the deltas and ignore news fundamentals? Yes, 100%. It is perfect, in my opinion, to trade just on the deltas and the probabilities and ignore fundamentals, technical analysis, and news altogether. I don't think you need to do any of those. I don't even think you need to do this technical analysis stuff. Okay, if you just want to pop your trades on and give yourself a good chance to win, then boom. Okay, you're just putting the odds in your favor by using a little technical analysis. I mean, even if you don't get into charts this in depth, can you find, here's silver. What did we notice on silver here? So who asked me about that? I don't remember who asked me about silver, but Craig, I think, right? So, all right, so Craig, here on silver, what do we got? So what's the pattern? What's the pattern on silver right now? Okay, we've got this nice resistance level that we're running up into. Okay, and then we've got an uptrend line that's heading higher. Okay, so right now, if you're looking at silver, to me, this is an ascending triangle. Okay, so it's an ascending triangle. We're heading up into this resistance level here that we've already hit. All right, and we're starting to break it today. So, some of you guys got upset this morning that I put a silver trade on and you couldn't get in on my same strikes, and I should have told you before I actually entered the trade. Okay? If I don't get in the trade, why would I can't help it. Okay. Before I stopped allowing comments on the alerts, what did 90% of all of the members do on every alert that I put? You would put your entry to show me that you had a better entry than me. So I would get in at 50 cents and you'd all tell me that you guys all got in at 70 cents and you made more money than me. Okay, so I think that's why everybody loves to comment on alerts, is they just want to show that they were a better trader than me, and you guys got more credit than I did. Half the time you get a better trade than I do. I'm just putting in the damn trade. You can then take it and decide, do I want to do this trade? Does it fit my trading plan? Should I adjust it? Okay, and you get it. But half the time you get a better fill. Okay. Half the time I get a better fill. So today I got the better fill. This SI trade for me is up 30% in about 3 hours right now. Okay. Why? Because we're in an ascending. We didn't even break out. I didn't even wait for the breakout. I just saw this thing going. We had a PSAR reversal here today. Okay. MACD is reversing higher with a break of the zero line today. You're in a 3-day squeeze with momentum climbing, RSI's climbing. Okay, so thank you, Teresa. So yeah, it's helpful when you guys post your trades, but when you post, like, put them in the member trays, I'll look in there and then you can make me feel bad all day long. But if I get a better fill, I get a better fill. You know what? I'm the one who came up with it. So I would think I would, have a better fill slightly. That's why I don't even like to post 0 DTE trades, because by the time I log my trade, okay, and then I got to go post it somewhere, the thing's moved. It's 0 DTE. I still try to give it to you quickly. I just don't give you my what I sold it for. I just give you the strikes so that you can get in as quickly as possible if you want to. All right. Anyway, silver, I love it. And if we break through here, looks like this thing is ready to pop. Okay, I like silver. I think this thing's getting ready to rock and roll. Look at this weekly. MACD's rising, RSI rising, long squeeze. This thing's been in a squeeze since July of last year. Okay, it's tried. Okay, maybe this is it. This is the second time. It's a white dot squeeze, which means it's an even more compressed squeeze right now. Okay, so I like it. Right, so this is what I'm shooting for. Okay, and the reason I use weekly, okay, not monthly, not daily, not anything else, not 15-minute, not 4-hour, is because my trades are typically 60 to 90 days to 120 days. Okay, this trade I put on happened to be a little shorter term one. Today it's a 30-day trade, but a monthly and a weekly chart aren't going to help you on a 7 or 30-day trade. They don't mean anything. So just figure out what time frame you're trading and set your charts accordingly. All right, and then I'm sure that nobody wants to look at live cattle in here, but if you looked at live cattle, here's a pretty good hammer right here. Okay, down, 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 a hammer, no follow through. Okay, down, 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 down. Okay, inverse hammer. Okay, so inverted hammer here, no follow through, hammer, follow through. Okay, so hammer finally got some decent follow through with essentially this would also go back. Maybe it's not perfect, but this is pretty much a bullish engulfing candle here. Again, I didn't have to look at anything. I didn't have to read any news to know that I got an inverted, didn't work. I got a hammer here with a bullish, which is a reversal, with a bullish engulfing next to it. This is where you want to get in and get long live cattle. And boom, 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 boom. Oh, what do we got? Okay, now what are we seeing here? This is a hanging man, right? So hanging man, appropriately named, happens at the top of a pattern. Hanging man candle, okay? Didn't really pan out. Then a little bit of a doji, kind of open and close at the same day. Nothing. Yeah, then, okay, a little bit more of a hanging man-ish here. Now you started to run out of momentum. Then here on the weekly, now what do we got? Okay. So now we got a little bit of a shooting star and more of a shooting star here. So 2 shooting star. These are telling you, get the F out of live cattle. Okay, right here. So even though we were in a ascending triangle, the weekly was telling you, I don't know, and MACD is rolling over, RSI is rolling over. Okay, so you're in an ascending triangle with, look at the falling momentum here. Squeezes to die. Okay, MACD, dying. So you're in an ascending triangle, which is one of my favorites. Okay, and we really couldn't get out of this thing and get any continuation. Okay, and then finally you just broke below here. But, I was watching the ascending triangle. If we had broken out up here, okay, and gotten some confirmation, I'd have been in this thing. Okay. However, it's telling you, don't do it. Your momentum is completely coming out of this. You were overbought and you're falling RSI. Everything's falling here, which means there's no momentum to break out of this triangle. Okay, so now, this triangle pattern that we were watching here, okay, we couldn't get out to the upside, and we finally broke it to the downside. Okay, but you were getting some warnings, and if you were watching these candles here, this was telling you the bulls failed, bulls failed, bulls failed. Okay, if the bulls are failing, get the heck out. Okay, or don't get in. Don't get in something bullish here anyway. Right now we got a pullback, nice to the 21 on this thing, and let's get rid of these fibs. Okay, we got a nice pullback here to the downside. We touched the 3 ATR level. We touched close to the 200 moving average. We can still continue. Okay, this is a giant, nothingness here, but it's a bit from a bullish or a bearish standpoint. I don't think we have an exact inverted hammer here today, but it's not terrible in here. I'm not going to go get long here, but I think live cattle is kind of setting up for a bit of a strangle opportunity here. So some of you just got burned, so you don't want to get in it out. Okay, but there you go. All right, so there's some futures. You have some ideas of some things you can trade. I'm in wheat right now. Now, wheat's in a descending triangle, which is no bueno, really. It's in a descending triangle, but look what's happening in this descending triangle. So why did I get in and put on a put credit spread in this pattern? Because if this pattern breaks this and goes lower, okay, it's not going to be bueno for me. So you want to make sure, what do we got here? So we have an inverted hammer right here, okay, at this previous support level, inverted hammer right here. Typically an inverted hammer is what? It's bullish when it's at the bottom. It's a good reversal pattern. Good follow through the next week, okay? Decent follow through the next week, right? And your momentum here has started to swing back up. So I did get long, even though squeeze is happening. If I'm looking at the daily here, it doesn't really matter so much the daily because I'm in this thing for a 90-day put credit spread. Okay, so daily can do whatever the heck it wants. I'm just worried about the weekly here. And we set this thing down around 480. I can't even see 480 to the left over here anywhere. Okay, there isn't anything. So there's just no support down there, but we're way down. And you can see the 3 ATRs at 477. Okay, and I sold the put credit spread at 480. All right, so I feel good with where we are on it overall on wheat. So that was wheat. All right. That's pretty much it. Now let's just we'll rock a couple stocks really quick. Um, Everybody's favorite, stuff out here. Palantir. Okay. What do you see on Palantir? If we were trading this thing, okay, you can't draw head and shoulders on toss. Okay, so but this is pretty much a head and shoulders. We didn't even go through that pattern. I don't, that pattern's not as big of a deal to me, but you can see easy left shoulder, head, right shoulder, neckline, break today. Okay, meh. This thing does not look bueno. Okay, so I think if you're long Palantir, you're probably the wrong direction right now on Palantir. But when it got to this high, what did we get? Okay, so you got a bit of a shooting star-ish pattern up here, and then down, 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 down. Oh, what did we get here? Got a hammer, up, 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 up. Okay, I'm not saying these are perfect. You got to wait for some follow through. Don't love it anyway on Palantir here. I'm not going to do anything, but if I was going to do anything, I would be bearish. Okay, MACD is falling, RSI is falling, squeeze is falling. On the weekly here, MACD is falling, RSI is falling. Pretty much everything is ugly when it comes to Palantir. Okay, so I would stay out of it. Okay. Any other stocks anybody wants to take a look at? But I wanted to point out Palantir because you get another pattern. Look at oil stocks. Bananas. Energy. Bananas. Okay. However, you're way above the 3 ATR. Okay, with a reversal candle here today, a little bit of a shooting star. Today on Pioneer, is this the blow off? I mean, I don't know, maybe. Okay, Oxy is one of my favorites. Okay, taking a look at that. What do we have here? We had an ascending triangle. Resistance, 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 resistance. Boom, broke it. Okay, ascending triangle. Love the pattern. Broke it here. Okay, so that's set up nicely, and then this thing just continues to be a fantastic uptrend for it. Apple. Okay, Apple. What's the pattern? Okay, if you're looking at the weekly, what's this pattern in here? Okay, it's a falling wedge, which can be somewhat of a bullish pattern if we break to the upside. Okay, so what we're going to be watching on Apple is, does Apple break to the upside of this falling or descending wedge pattern? On the weekly, and so what do you want to play in here? You're at support here. So you could also technically call this, we're getting crazy here. Okay, I'm only going to draw 3 patterns for you guys. Okay, you're in a falling wedge, but you're also in a descending triangle with support here. If this thing breaks below, I think 168, 169 here, if Apple breaks this level, you have a little bit more support down here, but you could have some more downside coming on Apple, and it doesn't look too good. On the weekly chart on Apple, definitely this falling wedge, so we could break to the upside. But right now, just watching this continuation pattern to the downside. But it's in a downtrend. PSR is negative. MACD is falling. RSI is falling. Squeeze is falling. Why would you play it? Okay. The only person that wants to play Apple right now is YOLOing some kind of stupid bet. Okay, because it's not telling you anything of value in here. Okay, except the fact that it's just falling. But I'm not getting negative. I'm not going to get short in a falling wedge. Okay, and we'll see if it bounces off this support level here. Okay, I don't really want to short something that's falling. Okay, it's already been falling, and time to short it was up here. Look at that candle right here. Look at that beautiful candle that you had right there. Okay, that was fantastic. Okay, so a nice shooting star, bearish candle right there on the weekly, follow through, and then done. Okay, so that gave you a really nice reversal. It was beautiful to watch right then and there. Okay, so I wouldn't touch this thing with a 10-foot pole. If you do, you're gambling. So if I'm taking a look at Microsoft, a little bit different chart, huh? So this thing is a little bit more of a, ascending triangle with some support up here. Okay, probably the pure triangle is like right up in here. A little bit of an ascending triangle. If we break to the upside, we could be off to new highs. Okay, MACD is kind of flat, RSI is kind of flat, squeeze is just kind of just doing its thing. The weekly here has been in a nice uptrend. Okay, but if we back out on the weekly, I don't know if it's perfect, really. Charting is never really perfect. Okay, this is a bit of an ascending wedge as well, so a rising wedge. You break below this wedge, could have some problems on Microsoft as well. So you could break up, could be nice. Okay, which if you were a betting person, what would you bet would happen? Well, you're running out of momentum. You're coming down from overbought, and squeeze momentum's coming out. Oh, here in a ascending wedge, don't like it. So I think this thing potentially could be negative. Okay, we'll see what happens. Okay, Amazon, I do like it. Look at this ascending triangle. This is a perfect ascending triangle in here. Okay, we got some gaps here, but if you're looking at this thing now, let's get this right. All right, I know we're over time, so let's do like just a few more things here. Look at this thing. Okay, this is a very significant ascending wedge pattern in Amazon that dates way back here from a hammer. Okay, then a shooting star to the downside, then a hammer, no follow through to the upside. Okay, shooting star to the downside, hammer to the upside. Okay, and on and on and on it goes. And now you've got, if you zoom in, so these candles are telling you whenever you have a chance at a significant level and you get the candle you want, could be pretty nice. And up here, you've got a doji forming on this week. Now, this week's only one day in, so I really don't care what one day does, right? But look at this ascending triangle. We break out, we could have a nice upside pop to go on the daily. So I would be thinking daily that Amazon might have a little more room to run to the upside, getting ready to maybe pop. On the weekly, though, if we break this piece here, okay, this could get ugly as well. So I think you got to watch what's going on. So, figure your patterns out, get a sense of it. Maybe you don't have any pattern, like, Meta is just trading sideways in a range. Okay, when it's in a range, I'm not going to do anything. If it breaks the range, we'll see what happens. Oh, and I want to go back to the Russell real quick. I don't think we touched on Russell, right? So I'm looking at Russell. Okay, it's a bit of a rising wedge pattern here. Not perfect. You could also redraw it a couple different ways, okay, in here, but still a bit of a rising wedge pattern. But this was a beautiful ascending in this whole space right here. This was a beautiful ascending triangle. Okay, that's why I got long Russell here when it popped out. Okay, it came up, came back down, touched off the 200, kind of held support here, ran up a bit. Okay, now 2 big ugly days down, not great for our long trades, but we're still long in this thing. We'll see how it continues, but I'm not worried about the daily. I'm more worried about this weekly pattern in here, and we'll see what happens on this particular pattern. I did not get any significant candles. This is a bearish engulfing this week. Okay, so bearish engulfing pattern, no bueno. Okay, may not be the best time to be in RTY here as well. And we do have some ratio spreads in this. One's down, one's up, and then we have a 1-1-2 trade that's up pretty nicely that we could catch a nice bear trap here. So I think a bear trap on RTY might be setting up decently. We'll see what happens on it. All right, I think that's probably pretty good. I don't know. And Google, look at that ascending wedge here. Pretty nice, moving to the upside overall. So to me, it's triangles and wedges, triangles and wedges, triangles and wedges, just like coaching soccer. Okay, so everything's in a wedge, in a triangle. Okay, so if you break to the upside, I really like it. If it's a rising wedge, it means it's getting weaker as it rises. We could break to the downside. I may use a weekly candle to give me a sense of, at a certain point, is that a good one? Look at that. I mean, look at that doji right there with follow through to the upside. Okay, good looking Google. Even though we gapped here, do we fill the gap? Maybe not for a long time, but Google still looks pretty good overall on it. NVIDIA, an ascending wedge, or ascending triangle, I should say, but breaking to the downside here. But overall, this candle here, no follow through, but this was a big hammer. Okay, still a decent wick to the upside. Okay, inverted hammer. Okay, so you've gotten several indications here of a trend change of hammer, a little bit of a doji, inverted hammer. I'm sorry, shooting star, I should say, not hammer. So, shooting star and a hammer up here on the upside, but really just more like a hanging man and a doji here. So a little indecision here. We could go either way. We'll see what the rest of this week holds. But if we continue to go down, I think you could be out. So, all right, perfect. I'm going to get out now. This has been an hour and a half or hour and 20 minutes. I just wanted to give you, again, I like candlesticks. I like 3 patterns, triangles and wedges. To me, those mean more than most any other patterns to me. And then I'm going to use those to determine whether if I'm an income navigator, I'm trading off the weekly chart and I'm looking for 1-1-2 triangles or ratio spreads based upon that stuff. And if I'm an active trader and I may be trading stocks, okay, I'm looking like this to short this son of a gun. If it breaks down below, we'll see Costco. Look at Costco breaking below this descending triangle. In here, you had a good reversal candle up in here, shooting star, follow through, downside, and now you're heading down. And this huge wick here on Costco, this was the death knell right here. This told you all you needed to know. Giant bearish engulfing candle that really was a bit of a shooting star pattern. Okay, bulls tried, they failed, bears took over, this thing's headed lower. This was when you get short Costco. Okay, there you go. That's all you need to know for today. Hope this was helpful for you guys. We'll let you rock and roll, and we'll see everybody back in the Discord. Take care, everybody. Bye-bye.